Hey everybody, Economic Ninja here. I hope you are doing great. I want to talk about the mining industry, and no, this is not a sponsored content. I got a great friend of the channel on, Patrick Karim. We're going to talk about something he put out on Twitter the other day, saying he thinks that we are at or close to a bottom in the mining industry and the mining stocks. Patrick, how are you doing?
It's always a pleasure, Ninja. An honor again to be on your ever-growing channel. So hopefully we get some value out there for your audience there.
Absolutely. And actually, it's not just my channel is growing, you're growing as well, because you have a insider sort of group, right? That I want to touch on that real quick, where you help people, you chart things, and tell me about it.
Yeah, well, it's a badcharts.com. I opened with Kevin Wadsworth, a great chartist. So on that, people who want to get the not inside information, but our charts, are the communication with us, the masterclass courses on technical analysis, and all our stock picks. And we do risk and money management and all that. That's all on badcharts.com, guys. And awesome. It just happens. We have 60% off yearly subs right now. It just happened, for real.
And it's really cheap. He didn't know, guys, that I was going to do this and plug this, but I want to help him out. What is it, like 169 for the year?
Yeah, 168 US for the whole year right now for the premium membership. So, and it's inflation proof, stagflation proof, guys. You lock in those prices, it's 60% off. You lock those prices, it's forever, guys. We're never going to increase those prices. So you have practically nothing to lose there.
Awesome. And guys, just so you know, he didn't know I was doing this. I'm not getting paid for this, but what do? We help people get big, and then we get big. That's how it works in this world. All right, Patrick, let's talk about the miners. Do you want to share your thesis here?
All right. So this is the tricky part, because a lot of people, guys, they look at the GDX, the Huey, it's like all these ETFs for the miners, but I never had data like deep in the 70s. And if we're going to head into the stagflation environment as a chart trader, I want to have the most data possible. And somebody showed me, hey, Patrick, look at the ASA ticker. The ASA, actually, it's a precious metals fund, which has a whole bunch of gold and silver miners. But guess what? I have data from the 1960s, late 60s. So this is giving us some clues to how we could expect the miners to behave in the macro environment we're at. So first, I'm going to set up the macro environment. The macro environment is defined by, is the SPX, this is top line, guys, is the SPX outperforming the producer price index, which is probably the best proxy for inflation. So as long as the US equities are going up, you're long these growth stocks, guys. Here in the 60s, it was Nifty 50, whatever it was, you're long that. But once it closes back down below that, you're in an inflation environment where you're susceptible of recessions. The price of commodities are always hampering down US equities. So I drew a line down here, guys, right here in this period where the US equities are underperforming producer price index. And right here is the ASA chart, huge bottom right here. It goes up, starts grinding in higher lows. Here it breaks out above a base. Horizontal support, resistance now turns support, explodes up as the US equities are having a hard time beating the PPI.
Can I jump in real quick?
Yeah.
Just so you guys know, where he just put the second arrow where the yellow circle is down, the second one, that was around the time Richard Nixon took us off the gold standard. Why? Because we had all kinds of pressure. Gold was leaving our vaults quickly because countries did not believe in what was going on, that the strength of the dollar or the American economy at that point. Okay, go ahead, Patrick.
Thanks. And then it goes up, and then people hear, I don't know, maybe during the mid 70s, I forget what the narratives of, and probably the same narratives we're hearing today. Maybe inflation has peaked, maybe there's going to be some deflation events or whatever it is. Then the miners, that precious metals fund with those gold and silver miners, went all the way back down. But it wasn't the end of the world. It wasn't the end of the bull era for those miners. It was just a simple retest of that breakout line. Because remember, as long as you're below this support line and you haven't went back above the next breakout line for US equities versus producer price index, these dips should be bought. Just like these dips should not be bought when US equities are beating the producer price index. Now you're in an environment where each of these sell-offs is an occasion to add more. So this was successful buying the dip. All these dips in that zone, they were all successful. 4 out of 4. If you would have bought these dips back to horizontal support, you would have cost average in or whatever, you would have accumulated more, So that's the story. And once you close out, once the US equities break out versus producer price index, you're out, guys. You swap your miners for whatever growth stock, whatever you fancy in the 1980s, Microsoft, whatever it is. History repeats once again. Break down below this 1, 2, 3, 4 point trend line, 5 point breaks down. Look at these pullbacks to a trend line by the dip. buy the dip. All these dips here, mid 2006, buy the dip. Look at that. Even the GFC people, oh, it's the end of the world. But look, US equities are not outperforming producer price index. You buy the dip in the miners. And what happened? That miner index off this base exploded higher. And once we're out of this, where once the SPX re-breaks again versus the PPI, then you do not buy the dips, because now these dips, you don't know how low they're going to go. And look where we are today. SPX broke down versus PPI. So for me, my light switch, I know I'm in the macro structure where these dips need, when they hit important support, important trend lines, retest, you have to buy them. You can't think that in a weight of evidence approach that this thing's going to keep plummeting down. And I'll just bring your attention, guys, don't get too greedy. There's still room for that line to retest that line.
I agree.
Right here, there's room to go down. And this is a monthly line chart. So it's based on intramonth. We could have a spike down super low. Look, just like in the GFC 2008, it closed below this line here. But I'm pretty sure intramonth in October, whenever this thing went down, it probably went down lower.
It did. And actually, can I just jump in there?
Yes.
The reason why you can't see it, everyone, on the chart is because these are monthly, correct, Patrick?
Exactly.
Okay. So the reason why, he's absolutely right. It did dip below that back then, but because gold and silver found their base about 4 weeks after Lehman collapsed and closed their doors, since stocks kept selling off into the spring and summer of 2009, when gold and silver found their base, that's when they took off. So like Patrick's saying, don't be greedy here. If you find your positions, you find a company you like and you just nibble at it, understand we still want that dry powder, cash on the side, being ready to buy these dips. Sorry, I just want to jump in with that.
No, it's fine. And because people look at that chart, they see the way I wrote it. But I'll show you another chart where, for me, from a weight of evidence, I know, look, this is always a question I ask myself, am I buying expensive or cheap? And right now, I know I'm approaching the cheap zone. It could get cheaper, but I'm not expensive, guys. Look, guys, we're not up here. We're not at the end of a 10-year bull era. You got to take that out. We're closer to a bottom to a top. So watch out. We're getting close. One day when you're exhausted and you think precious metals are never no good, look at the chart and we're probably going to be bouncing right at this area right here.
I completely agree. What other charts you got for us?
Well, just to fine tune, guys, let's go this way. Just to fine tune that entry point. This is the gold silver ratio, which is since those metals are financialized, every time they spike up, we're at a sell-off in US equities. There's a risk, right? Silver gets sold off more than gold. Here was the dot-com bubble. When that started winding down, that means silver started outperforming gold. That means it was risk on again. And as that unwinds, silver goes up more than US equities and more than gold. Fine. GFC spike up, sell off. Once that starts unwind, time to go long silver. Here's the March Madness 2020 spike. And look at this here. Here, as long as we're above this line, we're at risk of a severe market crash. And honestly, it's kind of scary because this thing's crescendoing upwards, guys. We could be at a GFC type event, March Madness type event. So don't go along those miners just yet, guys. But as soon as we get a spike here, an exhaustion wick, where it goes up and people think it's the end of the world, Powell pivot, Fed pivot, whatever it is, money printers, it's party time for everybody. Silver now has to price in all that monetary imbalance. And once we start closing below that sleep mode line, that's probably when the gold, the precious metals fund, the ASA chart, is probably going to also be bouncing on that support line.
And everybody knows that I'm calling for the fall in the fall. It actually is a very historical, quite frankly, a biblical time marker that lines up with Shemitahs, all that kind of stuff. These dates, these are very important dates. It's literally the same calendar. It's the sun, moon, and all that kind of stuff. It's that pulling of and pushing of water, like the ocean. We're mostly water, so the emotions are going to be high. And so quite frankly, Patrick, I do believe that, yeah, we're going to see something quite amazing before 2023.
So yeah, keep that cash, guys, ready. There's a reason the DXY is also going up, right? It's people are starting to hoard cash. So yeah, and once that spikes and people are going to say, okay, everything's safe, they're going to start buying stuff. Well, the first thing that's going to get bought up is gold, silver, and the miners, and that's where you want to be during the beginning.
Hey, as you're going to the next chart, Patrick, are you thinking about coming maybe to the silver symposium coming at the end of August? You think you can make it to the States?
Man, I got to stop missing these because there's so many people there I'd love to see in person, to talk to there. I've been cooped up in Canada there for too long. So
if you can get there, I'm going to be speaking and hanging out. It'd be awesome to see you in person. I know it might be hard to get down there at such short notice, but I'll put an affiliate link at the base of the video.
it's September?
No, it's let's see, August 31st and September 1st. So I think it's like a Tuesday, Wednesday.
It could be possible. It could
That would be so cool if we saw you there. It'd be super cool.
Let's chat after this and give me more info for sure.
All right, jump on in. Sorry, I totally threw you off.
No, that's fine. But and guys, I want just to make sure everybody understands where we are. So this is the Nasdaq, and every time it's closed below its 3-year moving average, within 1 to 3 months, gold put in the bottom. So this is what could drag us down, right? So if we see the GSR keep going up and there's a liquidity event, and here's where the Nasdaq is in where it was in June, and now I think it's a little bit below or real close to that. If there's a waterfall effect and it just really decides to crash within 1 to 3 months, that's when you could start expect gold bottoming, silver bottoming, and also that precious metals fund, the ASA chart. And that's when the cheapest generational opportunity you'll have to get back in those miners. It's coming, guys.
Yeah,
just not quite yet, but as soon as this decides to really go down there, and we have that pivot, I don't know when, that's when everything's gonna go back upwards. And even if US equities decide to go for a rally back upwards and try to test these new highs after they open the spigots, when adjusted for gold, it'll still be going down, because you got to remember.
That's a great point, Patrick. Let me jump in there. You're right. If they open the spigots and causes US equities to spike up, we have to remember, because of printing, it is going to be a race. Which one's going to outperform, equities or gold? Just like what happened in 2000, 2001.
Yeah. Look, we all know that in 2008, the SPX was practically at the same highs as 2001. But look here on this, when adjusted for producer price index, it didn't make a new high, because it was adjusted for inflation, so much inflation that it got squandered down. Same thing here in the 70s. So nominally it might, and maybe look, if you calculate the time in between these two guys, I calculate after an important high is put in place, it takes 4 to 7 years for the Nasdaq or the SPX to try to regain those highs. So if it starts tumbling below its 3-year moving average, like seriously, then it could be at least 4 years before nominally it ever sees the highs that it did last year, guys.
Yeah, and Patrick, didn't the PPI just hit double digits for the first time in quite a long time?
PPI double digits. There's a reason this thing's falling off the cliff here, and
exactly.
I don't think if I have time to show you one more chart, guys.
Yeah,
the PPI is heavily influenced by the oil price, and often we hear the oil price, oh, it can't go to 300, everything's gonna implode. Well, if they keep printing money and money keeps going in people's pockets, or maybe you have a better fundamental reason why, here's US oil divided by the gross domestic income. That's everybody's salaries. It's the whole money coming into the US people's hands. As that's a racial chart. So as this goes up, so if people's income keeps going up,
yeah,
who cares if oil goes to 300? They have more money, right? So it's just a racial chart. So the nominal high watermark for oil is not defined by just a random number like $300. If they keep printing money and devaluating the fiat, there's no ceiling on how oil could go. As long as this ratio stays below this line here, oil is not too expensive, guys. It's just not. So forget the nominal value of oil. As long as it doesn't outpace gross domestic income to a certain extent, it has room to grow.
Totally. Sorry for interrupting. Yeah. So what I want to say was you're absolutely right, Patrick. It doesn't take a lot of money to push into the real economy in the form of, let's say, stimulus checks. If they gave everybody a couple $1,000 in the country as stimulus checks to help with the price of gas, honestly, it would move that needle quite heavily. So it wouldn't actually take a lot of money moving into the real economy, spending, the velocity of money picking up. And I could see the government coming out with sometime this year stimulus. Matter of fact, I might as well say it now. I believe that we're actually going to see some form of stimulus hitting the real economy, the people on the street, by Christmas, because things are getting so rough. And like Patrick says, once there's money going into the system, it could push the price of oil much, much higher.
Of course. Do you think we're in a recession right now?
Oh gosh, yeah. I've been saying that we were in a recession for the last 2.5 months. I said
Yeah.
to even think that we have to wait for an economist to look back into the past and go, "Yep, we're in it." Yep. And what even blows me away is the first quarter of negative GDP earnings was a shock to the system. It was a complete surprise. They thought they were going to be a little positive. They ended up way negative. And to think that that is not going to trail this quarter, I think people are nuts. And quite frankly, the only way we don't hit a recession like this, what is it, this week or next, they come out with these numbers, is if they tweak the numbers. And I think there's so much truth going on right now in the world and in, let's say financial Twitter and YouTube and all that kind of stuff. It's gonna be very hard for them to tweak the numbers again, if that makes sense.
Yeah, no, look, the PPI, SPX breaking down versus the PPI. For me, that's all I need to know, that we're in a recession, or we're susceptible to being in a recession, or it's not going as good as they're telling us, right? Yeah. So it's just where we are. It's cycles, guys, and the charts will tell you that. Forget the mainstream news. Follow the ninja. Look at the charts, and you'll know the truth, man.
Well, thank you so much, Patrick, for coming on. I really appreciate it.
It was my honor. Thank you.
Awesome. And with following the ninja, you want to follow Patrick Karim at badcharts1 at Twitter. Thanks again, man. Have an awesome day.
All right. Thanks, man.
All right, guys. That being said, the Economic Ninja is out.